Share. Alejandro, so most analysts believe that Sri Lanka would be ripe for investment post a rating upgrade. Are you seeing that? Are you sort of anticipating that, for one? Secondly, what asset classes are you looking at that they would invest in, and what are the timelines?
Thank you, Savitri. So let me take a step back, perhaps, and just talk about the investment landscape for the last 2 years, which has been obviously there has been a huge drop on investments, both FDI and domestic investments, where FDI in 2021 was 1.8 billion, and now it's only a few hundred millions. And so really incredible drop in investments on the domestic side. Both equity and debt markets have been very weak, and we've seen some growth in the turnaround of the market lately, but it has been weak. And if you look at the number of IPOs, for example, in the last 2 years, it's been 4 compared to 28 in 2021. So that clearly, the market has been slow. Credit to private sector has been very low. Now, what will trigger investors to come back? In my view, 2 factors. One will be the conclusion of the external debt restructuring with the commercial creditors. Until that happens, the sovereign rating will not be changed. And with a sovereign rating of default, it's very unlikely that investors will come. I mean, this happens to most investors, where you don't invest in countries that are in default unless it's for very strategic assets. And that's what we have seen. Some investors have come, but for very strategic assets or even political reasons. Now, the second factor, in my view, is also what happens in the election. So we don't foresee a huge increase in investments from now until the elections. There may be some investments, but I think investors would like to see what happens in the elections and if there is going to be political stability and a continuation of reforms. So those are the 2 factors. Now, in terms of asset classes, once that happens, we see a lot of potential both on equity and debt. On debt, you're seeing an unprecedented time in terms of divestments from public assets. And that will bring a huge volume of equity investments if these divestments are concluded. 8 public sector companies are being divested from the state. And that is going to bring a huge amount of equity, both from international investors and domestic. Okay, so that, and I think if the government is serious and continues with an asset monetization program and creates a holding company and is able to manage public assets in a more efficient way, we'll see much more investment coming in. The second asset class that I would mention, and this will be more debt, although part equity, is the potential of the energy transition into renewable energy, where if the reforms proceed on the Electricity Act, the CB, the unbundling, we will see a large amount of investments coming into that sector because the needs for renewable until 2030, or at least the targets are in excess of 4,000 megawatt, and that can bring a huge investment volume of $4 or $5 billion in the next few years. Now, I think there will be a huge risk on equity investments with the FX risk, and whether the currency will depreciate or appreciate. That's obviously a huge risk for investors coming to invest into equity. So I think that will need to be taken into account. Thanks.